Hello and welcome to this CEO interview with CEO of Alcadon, Sonny Mirborn. My name is Adrian Gilani and I'm an equity research analyst here at ABG, responsible for covering Alcadon. We have Sonny with us today in connection with the Q3 report. So first of all, very happy to have you here.
Thank you, happy to be here.
We'll go right ahead with a few questions. First of all, looking at UK, you were off to a very strong start in UK in this quarter. Can you just talk a bit about the situation currently in the UK, what your expectations are going forward, and perhaps go into some of the synergy initiatives that you're taking in the UK and how that's going to improve performance even further going forward?
Sure. Well, the UK is an extremely interesting market in our business. Of course, it's a high growth market. We've seen that given our current exposure in the market, we see a market development of about 14% per year going forward the next 5 to 6 years. And it's of course positive. We're really satisfied that we are off to a good start with Network Center. They have shown historically that they are able to grow a bit faster than the market. That's what we hope will happen going forward as well. And the first month and a half in Alcadon was extremely good, and they also shown that they are able to gain some leverage on the margin side with growth, which is also something that we expect going forward. Otherwise, I can say that we do expect some synergies. We are going to help them in some segments, and they are going to help us in some segments, which we expect to accelerate growth further. But also we see on the margin side that we can do some common purchasing and help each other in that way, which would also give us some kind of a operating margin expansion, so to speak. But we're off to a good start. I'm really happy to see that the first few months will actually look good in Network Centers. We can actually show the market that we will get a similar experience as we did with 66 International in Denmark and Germany, for example.
Yeah, and just to follow up on that, you obviously in connection with the Network Center acquisition, you also expanded in the Benelux region. Can you just talk about the effects of improving your market position in that region as well?
Sure, that is something we're really satisfied with because now we have a strong position in the Netherlands. It's quite new though. Network Center have been there for about a year and a half, but they have succeeded quite well, I would say. We expanded to Belgium through an acquisition. We started off, we have invested a lot to be able to grow there as well. We are over time going to combine this and view the Benelux region as one company basically. That strategy is ongoing, and this is something that we are working with on a weekly basis right now. But as it looks right now, the development is quite good.
If we move on to Germany, obviously the performance in this quarter and recent quarters haven't been really what we've hoped for. Can you just talk about sort of the underlying factors driving that, and also when are we going to start seeing the potential of Germany really come into play as well?
You can say that we're satisfied that we are moving forward. The intentions with the great deals that we took about a year ago it's the same. We all want the same thing together with the customers. So we are moving forward. Deliveries have started. We are ramping up the organization. So we are seeing positive signs there. We're not happy with the development in the quarter, that we have to say. We expected more. But when we look at the order intake, the order stock, and see the trends that we see before us, we have a very positive mindset when it comes to Germany. We can also see that some of the other customer attractions that we are doing is starting to pay off, which is of course extremely positive. But we do have some problems with the delivery chain in Germany and some internal reorganizational issues with our main customers. So that makes things takes a little bit more time, which is quite usual when it comes to these huge deals. But we are moving ahead, and we're happy to say that at least.
Can you give us some sort of indication of the time frame? Because you're saying that we're seeing improvements in the order stock. When is this going to be realized? When are we going to see this in the sales and earnings numbers?
I can say that you're going to see a gradual ramp up for the next 6 to 12 months for sure. I do expect a really strong 2023, but we do expect a gradual ramp up for the next few months for sure.
And looking into 2023, of course, there are some fears out there of a looming recession, or perhaps some that would argue we're already in a recession.
Yeah.
Can you just talk a bit about how that could affect your prospects, both near term and long term, and go into perhaps specific markets or product areas that would be more or less affected by this?
You can say that FTTX in general, the data center segment is, nothing is recession proof. It's going to probably have some effect, but if you look at the macro megatrends in those segments alone, I don't expect a significant impact from a recession. It could also be that some capital is funneled into these segments because it's a nice yield for the investors. But when it comes to the commercial property segment, like the office networks, for example, the residential market, it's rather small for us right now, the residential side, but we could see some impact there, especially in the Nordics, of course, if a recession comes off. But the most negative side for us right now is that the demand in the global market is so high that you get material shortages, and we have the exchange rate effect. So that's the most negative effect for us. We are handling it. We have been prepared for it the last 9 months. So I'm not scared that it would impact us in a severe negative way, but we should expect and prepare for some effect for sure.
Yeah. So just to be clear, you're not seeing sort of investments starting to slow down from the big operators because they're afraid of a potential recession?
No, I would say the operator investments, they remain the same. And in some markets like the UK, Germany, and the Benelux area, for example, we see no slow off whatsoever. In the Nordics, in the fiber side, we don't see signs of a recession at all, I would say. On the office network, we see some hesitation, but it hasn't really been that obvious yet, I would have to say.
Yeah. And also looking at if we look ahead a bit, you recently had your Capital Markets Day. You announced a fairly ambitious Vision 2025, which it's fair to say leaves a bit of upside towards what we have in our estimates. If we start with the sort of growth part of that plan, can you sort of build a bridge for us of how you're going to work with acquisitions, how you're going to work with organic growth, and particularly where you see the most avenues for organic growth until 2025, and how are you going to reach that target?
We did a bottom-up analysis, and we looked at the underlying market growth and how we expected to react to that market growth and gain market shares. And we tried to be rather conservative, actually, in our estimates on the top line growth. We actually cut down the forecasts of the local country managers quite significantly to feel that this is borderline conservative. But on top of that, we are going to add acquisitions, of course, but we wouldn't want to be too aggressive on that side. We want to use our own cash flow mainly to do acquisitions, and thus we estimated that we would do rather small acquisitions going forward. But now in the beginning, like with Network Center, we need to do larger acquisitions to really gain a foothold in the high growth markets going forward. So it's a transitional period for us, but I'm 100% confident that would benefit the shareholders doing it this way. On the margin side, as we spoke about previously also, we expect that with volume growth, we will see an expansion in the margins. And that was what we have seen historically as well. Looking at Sweden alone, when we had some really large FTTH project, we saw that we had an EBIT margin of close to 13%. So we have seen that we are able to do this when we are growing. But right now we are seeing a ramp up effect where we are preparing for this growth, and we're seeing it coming as well.
Yeah. So you talked a bit about the margin side. Obviously the Vision 2025 also includes margin expansion from current levels, especially if we include the Network Center acquisition, which at least near term is going to weigh a bit on margins.
Yeah.
Is volume growth the main driver of reaching the Vision 2025 target of almost 11%, or are there other factors at play here that you're going to be able to benefit from as well?
It's volume growth primarily, and we also see on the acquisition pipeline that a lot of the companies that we actually investigate and look at and discuss with, they have somewhat higher operating margins than we do. So that's going to have a positive effect as well. But most of this effect comes from the volume growth. And we have seen historically that it makes sense when we look at what we have achieved the last 10 to 15 years, so to speak.
And just a final question from my end before we round off. You talked a bit about how you work with acquisitions in terms of expanding geographically. Now you have exposure towards several sort of high volume and high growth markets in UK, Germany, and Benelux. Are there any more markets that are sort of on the radar, or are you happy to just do bolt-on acquisitions from now on?
We have some of the markets that we find interesting in Europe for sure, but the focus in the near-term future would be bolt-on acquisitions and strengthening our presence in our existing markets. That's our strategy. we can see some benefits of growing through acquisitions in Germany, for example, and also in the UK, where we can have some significant growth in that way for sure.
Okay. With that, I think we covered all the points I wanted to. Once again, happy to have you here. Thanks for your time. And if you'd like to close off with any closing remarks, I'll just leave the floor to you.
Yeah, thank you for having me here. No, I'm quite satisfied. We are moving ahead with our plan. We are ramping up quite significantly, but we see that it's starting to pay off. The exchange rate, of course, affects us a lot. It takes some time for us to move on with the price increases, but we have a history of moving price increases to our customers on a quite regular basis. So in the midterm, I don't see this as a major issue, but the increase in global demand would benefit us for sure, but it also puts some strains on the material shortages globally. But we think this is a good problem for us, and it's going to benefit us in the long term for sure.
Okay.
Well, thank you for having me.
Thank you.